What's this week been like for you?
I think it's quite a different world per se. Volatility, as you said, is very elevated. I would say that within our region here, it's been closer to BAU, a bit more normalized. Vol is certainly higher than before, but let's say compared to what we're seeing in the rest of the world and even in stocks, I think the bond markets have remained rather stable within this region. So it's been all right, yeah.
Where do we go from here?
Where do we go from here? So I think basically the ECB did deliver the 50 that they talked about. Indeed, then, if you look at what was happening with the CDS that you guys showed just now, the bottom line is there are sufficient backstops at this juncture to warrant a continued fight on inflation. But I would say that in the fight on inflation, more or less, we are approaching or reaching terminal sooner or later. So the message from where we see it is, even into the FOMC coming this week, will the Fed hike? That remains a sort of question in the air. But even if you hike, you are increasingly arriving at a saturation point compared to 2022. So what does that mean as a bond investor is you reach terminal or you get close to terminal, you have to start thinking about going the other way. So I think personally for me, I'm more in the advocate camp of at least buying some duration within not only Asian local markets, but of course in the U.S. Treasury market and other markets.
Is that another way of saying you think yields have peaked?
I think we're getting close to the peak. Okay. I wouldn't call it the peak, but again, it's frankly impossible to time the exact peak. So my suggestion is just, average into the peak is the way that we should be thinking about it.
In terms of just this week, have you done anything that changes strategy in any way, just given the volatility we've seen? Is there any entry points for you that look attractive? Is it mostly focusing on local currency to kind of fend off from the risk off that we're seeing macro-wise?
So I think the terminal rate implications within the developed markets has some very different ways it can impact the currency markets. So you can see, for example, that actually a shift in terminal rate in the U.S. over earlier in the week actually translates into a weaker dollar. Yeah. So my point is risk off does not necessarily mean that it's bad for Asian currencies. True. Again, within Asia, we have a much more robust external metric compared to sort of the 1997s, the 08s of the world. So I think Asia FX for us, we've actually been quite neutral. If anything, then we're still more inclined to add into the risk here over time. So we're not actually very underweight in the Asian currency risk. In terms of duration, then, I think much like what the rest of the world has been doing, it's about shifting up the credit quality curve. So we do a bit of that. Likewise, within local markets, as you probably know, Korean treasury bonds, Singapore government bonds are very high quality instruments, very liquid. Yeah. And that's, I think, where you want to be. You want some flexibility. You want to play the terminal rate in the U.S. They have the correlations. And if anything, some of the Asian central banks, we will continue to take the view that maybe Korea is few of the earlier markets to take a rate cut over time.
What's your dollar view?
I think dollar view for us
and of course looking to next week as well and how that could change.
So I think that basically if the message really is that we are closer to terminal and that dot plot provides that projection, then I think the dollar may continue to weaken from here. So I think we are a bit more, as I said, a bit more engaged in the Asian currency markets. When I say engaged, you don't have to be very overweight any particular currency, but you want to be in some of the good betas and quality. So again, it goes back to my point. For example, Singapore, AAA, the Singapore dollar is something that we like. You get a bit of everything under a broad dollar weakness. Even under extreme risk-off scenario, it's not clear to me that that currency would underperform. And then, we have other currencies such as the carry currencies, Indian rupee, Indonesian rupiah. We think those are actually very attractive stories. Again, if you look at real yields, you look at interest rate buffer versus U.S., it's actually present in those currencies. So it's not clear to us, even if the terminal rate shifts up another 25 from here or 50, that these currencies would come under dramatic pressure.